Good afternoon, everyone. In this video, I'm going to do a quick recap of today's futures activity. Specifically, we had two different volatility events, one inside of the S&P 500 and one inside of the Dow. What's interesting is the Dow volatility event happened much earlier in the morning. It happened in that 7 to 8 a.m. Pacific hour versus the S&P volatility came in the latter half of the day. Let's go through each setup step by step. We'll start with the S&P 500 first here, and I have the ES futures loaded on. Now the volatility came right after that 10 a.m. hour had passed, 10 to 11 a.m. hour, where right as soon as the 11 a.m. hour starts, you'll see we see that selling straight into our volatility box models. Now as price action crosses the sign entry line, that's our first little sign that, hey, we have a volatility edge. Now we need to wait for price to give us clues that, hey, we're starting to see stabilization. That takes place with this green arrow for long setups or a red arrow had we hit the upper models looking for a short. So step one is a breach of our volatility box models. Step two is this green arrow. As soon as that happens, the setup rules are met. Our entry is at the sign line or better, which we get tons of candles to enter. Stop is outside of the volatility box clouds. The distance we risk is what we're going for on the flip side, which in the case of the S&P 500 was a little bit more than 7 points, which we hit in this move right up here. Now, as soon as that happened, we moved our stop from outside of the clouds to break even, and the second target, you'll see the target line came straight back down to where T1 was. So this total trade was good for 7.25 points, and that was T1 and T2. Now let's contrast this volatility with the Dow Jones. The Dow started off early in the morning with clues of an increased volatility regime. We had that in the 7 to 8 a.m. Pacific hour when price breached our Scalper Volatility Box models. You'll see that with step 1 of the sign entry lines, step 2, the edge signal confirmation, and we got the entry at the sign line or better. Now, unlike the S&P where I thought the Dow would continue to keep puking, we saw instead a little bit of rally going straight outside of our stops. So the Dow was a little bit tricky here compared to the S&P, which I thought was a little bit more straightforward. The volatility was much easier to trade. In fact, you even had that W reversal that we talk about quite often. Unlike the Dow, which happened at the tail end of an hour, and that too early in the morning on the back of some strength. Now, with price going outside of the clouds here, that then tells us very clearly that, hey, scalps are no longer being respected inside of the Dow. Switch to the aggressive volatility box models. One more time we get a breach off of the aggressive, chop around, and even the aggressive doesn't get respected, taking you to the Doomsday Aggressive models, which finally was the model that the day ended in inside of the Dow. So a lot of different volatility events that took place today. The S&P and the Dow were at the focal point of, I think, all of it. The S&P later half of the day, Dow Jones early half of the day. Both sides, if you notice though, were long side entries, or rather the bias was a little bit more to the long side, with bulls having very much control today compared to the bears. Hope you found this video helpful for those of you looking to make sense of this current futures volatility. If you take a look at the NASDAQ and you take a look at the Russell, you'll notice both of these index markets had less volatility than the counterparts we talked about today. Take care, everyone. Good luck trading, and I'll see you in our next update.